When you look at this chart, what stands out to you? What do you first notice? What I first notice is this 5 bar bull breakout that happened right here, right in the middle of the day. Whenever you see something that really stands out on the chart, that tends to continue to impact the chart for the rest of the day, and often through to the next day or couple days. So when I see a large breakout like this, it's much bigger than anything else that happened on the chart. After this, the day is unlikely to be a bear trend day. Majority of the time, at least 80%, probably 90% of the time, the day after this point is either going to be a trading range day or a bull trend day. So once you see something like this that really stands out, then that gives you confidence that the bear is not going to be too strong for the rest of the day. So 5 bars up, then what a lot of traders will do is they'll be buying these closes. So like this 4th bar, they'll buy the close of that. 5th bar, they'll buy the close of that. A little pullback, they'll buy below bars or buy closes during this pullback. And what they're betting on is that most of the time, either the market's going to continue going higher, or it's going to be in some sort of trading range like this. Or even if the trading range ends up being lower down here, it's still not going to go too far. It's unlikely to break out and head even lower. So I just wanted to point that out because that stood out to me. And the way a lot of the traders will trade this is buy these closes or scale in and buy these pullbacks. Once you get 5 bars up like this, really strong, you can expect a second leg up. So pull back, second leg, and this ends up being the second leg. Maybe this is the second leg. That could also be argued for. So effectively, this is all the first leg here, pull back, second leg. And then after that, the bulls kind of just ended up being this trading range. But at a minimum, it's unlikely to be a bear trend day. So that gives bulls confidence for the rest of the day to buy pullbacks. The day opened up in this trading range. Several overlapping bars. You get a bull bar, but then a bear bar, then the bear bar, and the next bar is a bull bar. Big tails. And when you see an open that looks like this, usually that range will double in size. So this range is 22 points, and that's about half or less than half of the range that we've been having lately. So when you get that, you can expect the market to break out and at least double the size of this range. And the size of this range also becomes a measured move target, which is also right where this first strong bull leg went right up to before pulling back. So when you're in this range, a lot of people will try to find a swing trade to take advantage of that breakout when it does happen. So what kind of trade can you try to take? Well, you want to try to take a bar that's closing on its low or high and take a stop order trade from that. So the first one that I really see would be this bear bar here. And the idea would be we're shorting here, hoping that the market doubles in size and breaks out and heads down here. The issue with selling here is that, well, if I scroll over to the left, the low of the week is right over here. And this is Friday, so those lows and highs are even more important. So with the low of the week being right below, we probably don't want to be selling right into that low of the week. So to me, that would make me hesitant on selling below that. A better swing trade on the open would be buying above this bull bar. At this point, we've had a double bottom test of the low of the week. And we have the close of yesterday way above and the 200 moving average above. And even the 20 moving average. We have several targets that are above, and we're looking for this range to double. So to me, it's reasonable to try to be swing trading and buying above a bull bar like this. And like we said, it would have gotten there. He would have had to have taken some heat, pull back here, pretty deep pull back here. But ultimately, if you held onto your stop, you would have been able to get out with that profit over here. As this bull bar broke out above this range and above the moving average, I was thinking, should you get long above this bar? Well, a lot of people did buy as this bar was forming, and they bought the close or they bought above it. I normally try to wait and get an actual setup to take instead of like buying during a bar. So then when you got this bear bar as a follow-through bar, that was not good for the bulls. The bulls really needed a second bull bar after this instead of a bear bar. Then also, so once you get this next bull bar, I don't like buying above a bull bar after there's been a bear bar. I'd rather be buying above a bull bar and then a second bull bar, and I like to be buying above that, not buying above this bull bar that's overlapping with this bear bar here. So to me, that's what really weakened the bulls and that stopped them from going higher initially. So there had to be a little bit of a pause, and a little bit of sell-off, and then the bulls took over again and bought over here. So as the market's fallen here, how I would probably do this is look at the 2000 tick chart or lower time frame and look for swing trades short through here. Because if we're failing to break above this range, then we might be trying to make a move down to go to the bottom and double the range down here. So I think it's good to be trying to look for shorts on a lower time frame during this, especially after the market had came back and touched the moving average here. And then so somewhere in this area, you want to be trying to look for swing trades to go short and to test the low of here, the low of the week, and possibly even break out below that. Now we get to our 5 bull bars. So 1 bull bar, 2 bull, a second closing above the moving average, a third. So by the time you get this third one, I also would be looking at a lower time frame and trying to get long on a lower time frame. Because even though here it looks basically straight up, on a lower time frame you're going to have all kinds of little pullbacks and different ways you can enter. So when I'm seeing this, I want to be looking to get short. When I'm seeing this, I'm looking to get long. And like I said, this is going to impact the market for more than just a few bars. It's probably going to keep the bears subdued for probably the rest of the day. So even if it sells off down here, it's probably not going to go too much lower. And bulls can buy here confident that they'll either make money immediately or they can wait and scale in and make money later. So during this pullback, I'd be on a lower time frame trying to find swing buys. And also during this pullback, once we've seen this wedge bottom at the moving average, double bottom, there's a chance that this might be a trap and the bulls will go up a little bit and then head lower. But with so many reasons to try to be getting long here, I think it's worth doing that. Worth trying to find. I would rather be trying to get long here instead. And if I do feel like if the market starts rolling over and it gets stuck below the moving average, then I would forget the longs and go back to being short. But until that happens, as long as it's staying above the moving average, and I want to be trying to look for longs down in this lower area down here. And we see this is a little bull bar, so I'll mark that as a buy on the 5-minute chart. I'd rather take that as a swing trade instead of a scalp. So if I'm buying, I'd rather be trying to go for 2 times your risk, which you get out right at these highs. So that's good. Trying to go for a scalp. Like I was saying, I felt like this might have been a trap here and the market would have turned down. So that's why I would rather try to swing trade, because I felt like the odds were a little bit lower there. I'm saying that because we did have this second leg already. So first leg and second leg. And even though the bears will be subdued for the rest of the day, there's a chance that this could be a second leg trap. It's a failed breakout of a trading range, and then we'd be heading down lower. So because of that, I'd avoid scalping, but it's good. I think it's good enough to try to go for a swing. What about buying here? Um, I rather not. You're coming off of basically like 5 bars of overlap here, and then you're also been having a lot of trading range price action over the last couple hours. So maybe for a swing trade, that's okay. Maybe I think it's a weaker swing trade. I'm not going to mark it. I wouldn't take it for a scalp. I don't think the probability is high enough to be taking this for a scalp and going for like 5 points or so. So because of so much overlap here, I would avoid taking that. Now, if there was a second bull bar following this, then I think that'd be a higher probability and be better. But with just this by itself, following this little bear channel here, still kind of high up in what could be a trading range, so I'd rather avoid that. Now, something that I was intrigued by was these 3 bull bars here. I did have an order to buy above this third bull bar. So, I'm just putting that out there that I was looking to buy above this, although it did not go above that. And so I wasn't filled, but I was thinking during this pullback, are these 3 bars going to end up as a bull trap, or is this going to be the start of a larger move up? And so far, it's been more of a trap because the market did come back below these lows. Although, neither side has really had conviction and really held on. They've both kind of just been scalping ever since we started the trading range over here. But when I was looking at these 3 bull bars, as I'm trying to figure out, is this a bull trap and we're going to go lower, or is this the start of a move up? Well, some ways you can figure that out. Imagine bulls that bought this close here. During this pullback, because it is a trading range, they're probably going to be buying below the low of the bar, buying lower down here. They're going to be comfortable scaling in until they're clearly wrong. So they're buying, and they're going to be disappointed by this first bear bar. They're going to be disappointed by the second bear bar. But there's really not a strong reason to get out yet if their plan was to be scaling in. But they're so disappointed that they'd probably be giving up on the idea of making a big profit up here. They're probably scared enough that they just want to get out, break even. They want to try to get out at their initial entry at this third close. So imagine they buy the close here. They buy more below the bar. So they've taken 2 trades and their midpoint is somewhere around here. They take another trade the same distance down. So they're buying around here. And now their midpoint is here at this price. So we can see what the market did was somewhere in here, they just decided to be getting out around this price. So they decided they bought here, they bought more lower. Their midpoint is here. They're just getting out at the midpoint. They're not holding their longs up, even up to the first entry. They're just getting out at this break even. So when I started to see this, and then I got this third bear bar closing, almost on its low. It at least has a bear body. Then to me, I was looking at this as this would be a good place to go short, and treating this as a bull trap. So bulls were buying, they were scaling in, but they're disappointed and they're going to be getting out below a bear bar. So I liked this as a short going below there. Now, you got another bear bar, and I was thinking, should I sell below this bear bar? And ultimately did not sell below this larger bear bar here because we are coming up against the lower edge of this trading range. And like I had said before, these 5 strong bull bars, that's going to continue to impact the market. So I'm not opposed to finding a good short over here and taking it, but I'd rather be just taking a higher short like this and treating this as a trap instead of trying to do a lower short where now you're lower in the trading range and you really need the odds of a breakout to be higher to be shorting down here, and I don't think they're high enough to short. And I was kind of wrestling in my mind with this. Is this a bull trap and it's going to send the market lower, like somewhere down here? Or is the trading range going to be more important and take precedent? And then these 5 bull bars are going to take precedent. Ultimately, I decided that the trading range and the bullish strength were stronger, so I decided not to take this short below this bear bar. And clearly that was the right thing, because ever since then we've just been sideways. But taking this first bear short, that's a reasonable trade, because I think what I determined was that these 3 bull bars these bulls did in fact get trapped. And when you see trapped traders, you want to take advantage of them getting squeezed, and you can take advantage as they're getting out of their positions. So since it's Friday, let's look at the weekly chart. This is the weekly chart. And we have this big trend line that's been working up that we've been talking about for a while now. This week is going to close with a small bull body. So we're closing a little bit higher than we started, but it's going to have this big tail on top. Now, looking at this, there's a couple different things that are going on. First, the larger pattern is that we have a bull trend and a breakout of the trend line. So what happens maybe 75% of the time is that the market tries to test the highs. Sometimes it goes above the highs. Sometimes it goes right up to it, or sometimes it stays below, but at least it made an attempt to come back and test the highs. So I do expect the market at some point over the next couple months to try to make a move up, maybe to test the moving average. It's gonna make an attempt up to these highs. I don't know if it's going to be successful or not. We're going to need to see more bars. But more recently, what we've had is 4 bear bars down, all closing, 3 of them closing below their midpoints, but all of them have fairly large bodies. And then this one little bull doji is not going to be able to offset 1 full month of selling, fairly consistent selling. So probably more sellers above this bull bar here for next week. So probably more sellers around 57.70. And what they're going to do, I don't know. Maybe I'll end up trying to, play this on the weekly chart with like a micro or something. But if I was going to do that, I would sell above this bull bar as this big tail on top. It's not a very good buy. And if the market goes higher, it would probably end up as more of a trading range somewhere in this area. So around 6,000, 6,100, we would probably have, even if for the rally up, we'd probably have deep pullbacks that come back to around this price. So, so that's how I would play it. And I imagine that's how a lot of other people would play this market as well. So I'm expecting the bulls not to be too strong over the next couple of months, but they will probably try to make an attempt back up and see if they can get back into this channel. Although I don't think they'll be too successful. I think it was going to be more of a trading range around 6,000, 5,900. So that'll be interesting going into next week. We'll see. Probably the market will get above this next week. I just feel like there's going to be lots of orders above this bull bar. So that would mean we have about 100 points up next week is what I would expect. It just seems to me like the market would try to get above that. So it'll be interesting to watch this on the weekly chart and see how that plays out. That's all I have, guys. I'm going to make a couple more videos this weekend, trading related. And then next week, I will post the Peru video. So I'll have some good things coming out over the next couple of weeks or over the next few days. All right. See you guys.